Ratings agency Fitch is now warning that Canadian real estate prices are going to decline in 2023. Plus, we're going to go through all the real estate declines that are happening in the Greater Toronto area, which is one of Canada's frothiest housing markets. They are seeing significant declines, and we're going to go through the data on that. So let's get right into this. Canadian real estate prices to see double-digit drop, delinquencies climb, Fitch ratings. Personally, I think this is an optimistic report, but they got some good charts in here. Fitch Ratings is the latest firm to call real estate prices across Canada. Prices are forecast to fall between 5 and 7% in 2023. And you'll just see how ridiculous that is when you look at some of the declines that we're seeing in certain areas. Some areas have declined like 7% month over month in November. Down 15% from peak to trough in nominal terms being an important note to mention when inflation is so elevated. I agree with that. Prices are seen returning to growth in 2024, though lower than average. Just to explain this real simply, basically what they're talking about when you talk about inflation adjusted prices, real prices versus nominal prices. Nominal is the actual fall in prices, the dollar amount. Real price declines are essentially inflation adjusted. Now, the CPI is completely corrupt, but if you use that model, then essentially you're going to end up with higher numbers, especially for the past year, because inflation is so elevated. So that's essentially what they're talking about, but it is important because the thing is, if you sell a house for $500,000 today and you can buy less with that $500,000 than you could buy in 2019 if you sold it for the same amount, then that house has fallen in real terms because the purchasing power of the same amount of money now equals less in 2022 and going into 2023, which we know is definitely the case. That's definitely the case here. They got a great chart here that basically shows the HPN index. I mean, they have all these indexes just show us actual prices. How about that? Disposable income nominal rebase. So you can basically see how disposable income there has just completely flatlined, and it's really actually gone down. Just think about how much people's wages are declining in real terms. We've gone through many times about what inflation is really at. It's really at 20%. It's really at 30%. And it's very personal to you. So it's hard to actually put a number on it because somebody who takes public transportation probably has barely seen their costs increase compared with somebody who drives everywhere or has to drive long distances, especially if that's a diesel truck, because diesel prices, they haven't come down at all. So even though gas prices have come down, diesel prices haven't come down, as a commenter pointed out in the last stream that we did, which is totally right. And it's something to bear in mind because diesel is an input cost to pretty much everything. The fall will be driven by the continued rise in interest rates, inflationary pressures, a stagnant economy, and declining affordability, which will dampen demand, said Susan Hosterman, Senior Director of North America for Fitch Ratings. The decline is substantial, but much smaller than forecasts from other firms. Hosterman attributes this to strong support for the market, a supply imbalance. Let's tackle that first, actually. So supply, everybody is always so hyper focused on supply. Yet you walk around in any Canadian city, Vancouver, Calgary, Toronto, they are throwing up single family homes everywhere in Calgary. It's like Calgary, the entire city, is going to expand by like 30% over the next 2 to 3 years. Then you've got Vancouver and Toronto. They build upwards instead of out. So still, they're building lots and lots of condos, and they have been for the past 5 to 7 years. This supply shortage myth is a myth. It's exactly that, because it's really just demand has been artificially high because of artificially low interest rates, ridiculous lending practices that we keep seeing being exposed, and nobody really wants to talk about it, but it's happening nevertheless. So you've got all this creating this artificial demand, and essentially you have that happen in reverse when things go south, because essentially when the housing market declines, well, guess what? Like we talked about with the appraisals on the last live stream, it means that people cannot just go out and buy a home. There's more risk involved with buying a home. Plus, you add into the factor recession, that people are losing their jobs. What does that do to demand normally? Plus, you have households consolidating, which means more people moving back home in with their parents. And that isn't just homeowners, that will also be a lot of renters as well, because typically renters are younger people. So those people are going to move back in with their parents. That means less rental demand. And she even talks about rental demand in this as one of her supporting arguments for housing prices not going down that much, which I think is utterly ridiculous. And then the immigration argument, which is just mind-boggling, because you have, it's not just immigration. And again, I think they do this intentionally, but I may be wrong. They may just actually be stupid, because these are people that are getting paid lots and lots of money to make these reports. And if they're not even looking at these different things, then I do think, yes, we can call them stupid. And the reality is, you think about immigration, but what about the birth rate? The birth rate is absolutely collapsing in Canada. It's one of the lowest in the developed world. So the birth rate is absolutely collapsing in Canada. So they're just offsetting that with immigration. You've still got an aging population, and you've still got the fact as well that what has happened over the past 5 to 7 years with the immigration system, as somebody who's been through that system and knows how that system works, is you've essentially seen the bar to get into Canada just get lower and lower and lower. So it's not as if more people want to move to Canada, it's just that they keep dropping the bar. So the people that they're allowing into Canada, they have less money, they have less skilled, and that means they're competing more on the bottom end of the scale. I have never had an Uber driver that isn't an immigrant. Never. I've never had a Canadian Uber driver, and I've been on hundreds of trips within Canada on Uber. It is something you don't think about, but when you go into a grocery store, all the low skilled jobs in Canada are typically filled by immigrants. So to say those people are going out and buying the houses, and if you are saying that is the case, then boy, there's going to be a massive crash. And that could very much be the case, because if these people are buying, like we talked about with the Uber driver in the last stream, then like I said, hell to pay over the next 5 to 10 years. It's just going to be an absolute disaster. So people have got to be really careful what they say, because it's like they're not thinking things through. And it drives me bananas, because quite frankly, like I said, these people are paid hundreds of thousands of dollars to produce these reports, and they get the basics wrong, focusing on individual things instead of the bigger picture in total. This is the house price index, and I don't like these indexes. We're going to go into the declines in a minute to show you some of the crazy declines that are starting to happen now across Canada, and we'll have the December report out soon, and we'll take a look at that too. This index is currently sat at 302. It has a freaking long way to go just to get down to 2015 levels. You're talking nearly half this index needs to fall. Now, I'm sure somebody can leave a comment and knows more about how this index is calculated, because I don't have a clue. These indexes, there's so many different ones for Canada and the US housing market that it gets super confusing, and I think it's meant to be confusing. I came across this great website, and I'm going to link it in the description so you can go and explore yourself, you can actually go through some of the individual areas. So if you look at Vaughan, for example, you can see the annual sales change is down 50%. You've seen a 50% decline in demand, and people still can't afford the price, which is 1.3 million currently, and prices are down negative 2.5% year over year in nominal terms. So think about that. If you add 20% inflation onto that, you're talking a 22.5% decline, and people still can't afford that, because the reality is home price appreciation should really be directly correlated with real wage growth. Well, not even real wage growth, just wage growth in general, because even using inflation adjusted metrics is kind of distorted by the fact that inflation isn't even real. Like, what the government is telling us is inflation is just a joke, and I just can't take people seriously when they say, oh yeah, inflation is 6% year over year, guys. Nothing to worry about there. All right, okay. Take a look at some of these other places. You've got Ajax, that's down 12% year over year. Again, sales down like 50%. You've got all these places where people are rushing to the suburbs to buy. They're down 50%. And nominal prices year over year are down too. So it is really some big declines. You've got Brampton, annual change in price now down 12.3%. Sales are down 65.5%. You've got Vaughan, which is down 50%. So these are areas I'm pointing out where high density, Markham is another one, down 50%. Prices down also. And the reason why I'm telling you about these immigrant areas is because that report talks about immigration like that is going to be the fuel. You've got Brampton down 65% home sales year over year. So I don't think so. And you know that, like, Brampton is an area where a lot of immigrants live. You look at the census data, Brampton, Mississauga, Vaughan, Richmond Hill, Markham, these are all areas where a lot of immigrants tend to live, and they're suburban areas. If you look at Oakville, that's down 50%. And the list goes on. I mean, Burlington, another hot area, prices are now down 16.1%. You know, Milton is also down, although average sold price up. But look at this. This is down 20% year over year. I mean, that is one of the highest, but monthly change is actually on the up. But you're going to see this go up and down until we get to the point, which is that point where people are forced into selling. And that point, when people are forced to sell, that's when you're going to see the capitulation and the housing market really roll over and start to nosedive. Because at the moment, like I showed you on yesterday's stream, we're in that denial phase. So people right now, they're just saying, you know what, we'll wait until next spring. Everybody's saying we'll wait until next spring. Well, what's everybody going to do next spring? Because that is approaching. That's not going to be that far away. So I think it's kind of just, I think it's just a toxic combination that you're going to see. And I think this report is just very optimistic. Just another one to throw in the trash. The only bull case I see for the housing market is the fact that so many people now are calling for a crash, are calling for declines. Well, there's not that many people calling for a crash, actually, let me clarify. I think that's the only bull case, because I am a person that when I see the herd doing something, even if it's saying this is all going to go down, I tend to start to think the opposite way. So anyway, if you've enjoyed this video, you might like this video here. You might also like this video here. I'll see you in the next one.